Hello, everyone. Pat Smeeta here with you Monday, March the 31st. Interest rate update, the weekly summary for the week that's about to happen. Now, we did get some news today, primarily being the Chicago Purchase Managers Index, and it ticked up slightly a little bit for February. And what you really saw there was managers buying up as much as they can because they were anticipating the tariffs kicking in. And that leads to our second piece of information. U.S. Secretary of Commerce confirmed over the weekend that the Trump tariffs are not a strategy to get more concessions from another country, but a means of raising revenue. That's very important because it shows that these tariffs are here to stay. And the longer they stay, more economists are worried that the longer we're going to have economic slowdown and a potential recession. So it's definitely something to keep in mind. Now, we do get a lot of jobs information this week. Tomorrow we get the JOLTS, the job openings. This is a survey that shows how many jobs are available, how many people have left to take new jobs, how many people got hired, that kind of a thing. And it's really a private party survey that's meant to be a complement to ADP, which comes on Wednesday, and the big BLS jobs report from the government on Friday. Now, we're also going to get ISM manufacturing survey, which kind of amalgates all the jobs information that we've received. We get auto sales, which is very important, and construction spending. On Wednesday, we get the ADP private payroll change, which is very important because this is a private company that handles about 40 to 50 million payrolls for various corporations. So it's a great resource to see how the private market is hiring, not hiring, that kind of a thing. We also get factory orders, which will tell us what's going on in manufacturing. On Thursday, we get the Challenger job cuts, and this is important because this tells us what the companies are doing, whether they're laying off or whether they're hiring. And we get the regular weekly information along with the U.S. trade deficit, which has become a favorite point of talking with the current administration. And then finally, we get the unemployment rate on Friday. Now, it is expected to go up to 4.2, maybe as high as 4.3%. When we look at the technical analysis, we saw today was a good day in anticipation of a lot of this data. So these are the mortgage-backed securities. They're going higher. If we can break above this level, we could see rates squarely below 5%. We saw the same on the 10-year bond yields, where they're really going. And as long as we can go below this level, we're going to see interest rates enter a new phase, a lot more favorable to us. If you look at the daily scenario, you see that interest rates are getting below that 6% range. Finally, if you like what you see, please like us. Thank you.